Hi, this is Mayank and welcome to my channel. So today I'll discuss about five stocks basically which I invested in last 1 month. I'll tell the reasoning behind it, my personal logic about that, and I'll tell you what exactly time frame I'm looking for and what the exit point which I have. So I'll discuss about those in brief, but at any point in time this is not a recommendation video. This is just my personal opinion. You can do your own research and decide whether you want to invest or you don't want to invest and take your call based on that. So let's jump into the video directly and we'll discuss one by one all these stocks. Kotak Mahindra Banks. The reason of buying this stock is very simple. This is a very good franchisee. It almost a market cap of 3,40,000 crores. Stock price of 18.6, which is price to book value ratio. If you go here and check, the price to book value ratio is almost lowest for last 10 years. Okay, and a big bank, is big franchisee like Kotak Mahindra Bank will not be available at this particular P ratio or I'll say price to book value ratio always. So this is kind of opportunity which I want to take to invest in a good franchisee stable company, and not always all the investment has to be a risky investment. So this is my kind of, you can say, balancing the portfolio, but I see a good opportunity here. And after all the run up in PSU banks, private banks is something which run up is on the horizon. Once the interest rate starts cutting from RBI, then I think that the rally will start in this all these private banks. So Kotak Mahindra Bank is my first pick out of all the banks. Then if you see second bank which I invested is again HDFC Bank, right? So both are banks. HDFC Bank also same reason. If you go and see market cap 11 lakh 52,000 crore market cap after the merger, this is huge. I don't expect a 10x return from here, but again opportunity, even if I get double from here, it's a huge opportunity, right? And if you see the loan book from these companies, the loan book is growing almost. If you see balance sheet borrowing, go to balance sheet, you see borrowings. The borrowing is increasing like anything. 17 lakh 84,000, almost 18 lakh if you see, and this is 21.5 lakh. So 3.5 lakh borrowing they are doing year on year, right? So it's almost 20% growth in the loan book, and expecting March 2024 loan book will grow even bigger than this, right? So even being such a large bank, their borrowing is increasing 20% on CAGR. So considering that kind of growth and considering the price to book value ratio for even HDFC Bank, almost close to its lowest ever. If you see median is 3.7 and current book value is 3.0. So considering that kind of, if 25%, 30% kind of growth in PB, price to book value ratio, also happens, and somehow they reach in the range of 3.7 or 4, then I think it can easily double from here. So this is kind of opportunity which I'm looking for. And this is my thesis of buying this particular stock. If you see price to earning ratio, just to put an example, this was somewhere around 28.4 and then around 28.6 in the range of April, 2021, right? Before COVID, it was also in the range of 28.9 and 30. So if you see 30 is the price to book value ratio if you consider, and this company's profit and all if you calculate, there is a chance of getting 75 to 80% and sometimes 100% return also in this stock. So this is the second stock which I wanted to buy. Okay, I bought already. Third stock which I want to buy is I already bought, basically again same thing. Rate Gain Travel Technologies. Why I want to buy Rate Gain? Basically the reason is the boom in the travel sector. So not only travel, entire hospitality sector. If you just travel, if you say hotels, and this company is a proxy to that segment. If you see what they do, they provide services. They are a leading SaaS player in the travel and tourism vertical. And we know how travel sector, entire sector is working right now. They provide data as a service to all the hotels. They provide distribution to all the hotels and all the travel like airlines. They provide marketing technology with the use of AI-based solution to all these companies. And they are present across the entire value chain. So they are present for, they cover hotels, they cover OTAs, they cover car rentals, they cover airlines, they provide tour operators, they do cruises, everything do in the tourism sector. And we all know it's in a boom sector. And they have clients like Six Continental Hotels, Lemon Tree Hotels, Oyo Hotels, Homes Private Limited, so Oyo Hotels and Homes Private Limited, and they have small hotel chains also, which are more than 5 hotels. So overall, they are doing great in terms of growth. They are basically forecasting a growth of around 20% CAGR growth for next 5 years and 20-25% CAGR for next 5 years. So consider this kind of growth, and their stock P is 58, kind of on the higher side. But since it is a growing sector and it's a kind of a booming stage, I believe this stock has a good potential to grow. And then it has corrected a lot from the peak. This is also a reason why I bought. So peak was 922. If you see from peak, it's right now 700. So almost close to 25-30% corrected. So if even if it jumps to its previous high, the growth will be somewhere around 40-45% for me, in the range of 42%, 45% for me. And anything on top of that, whichever the because of PE expansion maybe and because of earning expansion maybe, then around 100% return something which I'm targeting in RateGain Travel Technologies. Time frame wise, my time frame is roughly around maximum 1 to 2 years kind of thing. Still, this entire boom happens. So it's a momentum based investment. Third investment is Angel One. So Angel One, again, we know it's a broking platform. Angel One has been doing great. If you see their revenue jump year on year and profit year on year, it's a crazy journey. Sales has increased from 450 to 4 to 72 crores, almost 9 to 10 times. Net profit from 470 to 1200, almost 1126 crores, roughly 13 times, or you can say 25, 26 times of net profit growth they have done. And it's a SaaS based platform, it's a tech platform. So tech platforms, what happens, invest at once and then slowly start reaping the benefits. So it's a compounding profit effect. That's the reason you see their profit margin almost 47%, 39%. This reduced little bit, but I believe they're spending a lot on marketing these days. If you see the sponsor of IPL and they're marketing a lot on tier 2 and tier 3 cities. So considering marketing spend, it might look like they are earning less, but if you remove that marketing expense from there, then probably they are making a revenue of around 45-46% OPM. So this is a very good operating profit margin, and they're also diversifying to sectors like PMS and then sectors like your what do you say what do you call asset management, and they are doing the mutual funds, they are doing the insurance, all those things they are putting in a single platform. So they are taking the risk out of only brokerage, because brokerage is a very highly regulated industry. If any regulations come from government, can hamper the revenue a lot. So these sectors, PMS and wealth management, they are high margin sectors, and they are going to invest more money and diversify this entire sector. So I'm very big bullish on this particular sector. Why? Because a lot of people are going to invest in this particular sector. Okay, sector of basically equity investment and mutual fund investment. So considering this kind of movement going on in the investment of like how the Indians are doing investment, they're moving from FD to equities, and so Angel One can be a good beneficiary in the entire pattern of investment change, right? So Angel One is my fourth company. Fifth company is Janus Powers. So Janus Powers basically, so Janus Power is the company in smart metering. They have won a lot of contract. They have more than I think 20 million kind of meters they want to put. Of this 20 million meters, they've got the contract. Because of contract, the stock P expanded to 193. The price, if you see in last 3 years, the price increased from almost 80-90 rupees to almost 300 rupees, right? So almost 4 times jump they have seen the revenue. But now the entire revenue will start forecasting, start coming into the books. It was all speculation, but now it's you can see on the books. If you see their last 12 months is 981 crores, where they made a profit of 85 crores, roughly around 8 to 9% of margin. If you see their forecast, they are saying the forecast wise they will make a revenue of 2,500 crores for FY25, and these are saying very sure because they have overall revenue potential for next 24 to 30 months. It's around 3,000, sorry, 5 6,000 crores. Out of 6,000 they are saying 2,500 they will make in this particular year, right, 2025. So considering the kind of revenue forecast, and they're also saying the operating profit margin will expand from 11% to 15 to 16%. So if OPM expands to 15-16%, I believe their net profit also expand to 13 to 14%. Now, considering these two metrics, the profit margin and the overall revenue potential for this year, I have done a calculation, and my calculation basically says that the revenue potential, what is the price target potential for me. So let me share the Excel sheet with you. So here for this company, the current P is 193, which is definitely on the higher side, but against the momentum based stock, and if the current government comes into picture, which most likely to happen, then we can see more inflow towards this infrastructure and e-metering kind of smart metering kind of things. So the current P and then 2,500 is the operating profit, and they make a profit of 10%. Potential is around 14-15%, but if they make around 10% also, base case scenario, and their number of shares are 13.4, which is outstanding number of shares, 13.4 crores basically. So earning per share comes around 8.22, right? So that price target is 1,587. This is the primary price target. Now imagine that their P reduces to 100, even if the P is very high. Somehow for some reason the P gets reduced, but the operating profit, whatever they mentioned, they are able to achieve that operating profit. Net profit margin around 10% I considered. If they consider around 13%, this goes up to 325. And then earning per share and number of shares you can see is 10.69 EPS. So their potential is around 1,069, 1,070 rupees. If the P reduces to this particular 100 divided by 2 right now, and the best case scenario, right? This is the worst case scenario. This is the best case scenario. I'll write over here. So this is the basically base case scenario, this is the worst case scenario, and if you see the best case scenario, which I'll not consider tell you to consider always, but if you see this best case scenario, then we'll copy paste here, and then the best case scenario will be their PE remains at 193, which is currently what the PE is 193, and the operating profit is still they're able to achieve, and their profit margin is almost in the price range of 0.13%, right? Like 13% they make the profit margin, then their PE can go very high, and then if you see, if you copy paste this thing here, then you will see the price target is 2063 rupees. So this is the price target what they can get from here. So current price, if you see, the current price is roughly around 325, and if you see the Excel sheet, the potential is 1587 the base case scenario, worst case scenario 1069, and best case scenario 2063. It's almost 6 to 7 times of profit in the best case scenario, worst case scenario roughly 5 times profit, and worst case scenario roughly 3 times of profit. So this is what I'm expecting, considering they do all these things, the revenue. Now take the worst case scenario, like completely worst case scenario, right? So let's suppose horrible case scenario. The P reduces to 100. They don't even do 2500, they do 50% of that, roughly 1500 crores operating profit, and they do a profit margin of 10%. So basically I'll copy this part, or I'll just do here. If you reduce here, right? So 13% of they do 1500 crores, right? So this is their I'll copy this parts here. So this is their outstanding shares, and they get a target price of around 641. So even in the horrible case scenario, if you see, they do a target price of 641 compared to current price. This is almost double of 325. So even in the worst case scenario, this stock has a potential to double our money. So this is my primary reason why I invested in this particular stock.